Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind corporate filings. And let me tell you, this latest filing from Axos Financial Incorporated is a real page turner involving a massive new deal that is sure to shake things up. So Axos Financial Incorporated is back in the news, and this time it is all about a significant financial move they've just completed. On the 19th of September 2025, they really sweetened the pot by selling $200 million worth of notes, and get this, these aren't just any notes, they re-7.00% fixed to floating rate subordinated notes that are due all the way out in 2035. Now that sounds like a lot of jargon, so let S break it down. Think of these notes as a loan Axos is taking out. The crucial part here is the interest rate. For the first 5 years starting in October of 2030, the rate is locked in at a juicy 7.00%. That is pretty good, especially in a market where rates can swing. But after that, it becomes a floating rate, which means it will change based on a benchmark called 3-month term SOFR. They added a sizable 379 basis points to that benchmark. So while it offers some flexibility, it also means the interest cost could go up if that SOFR rate climbs. These notes are essentially long-term debt, maturing in 2035. What is really interesting about these notes is their place in the company S financial structure. They are what is called subordinated. This means if Axos ran into serious trouble and had to pay back its debts, the holders of these notes would be paid after other more senior debts are settled. It is a bit like being in the back of the line for repayment, so it is a riskier type of debt for the investors. Because of this, higher risk investors usually demand a higher interest rate, which Axos is providing with that 7.00% initial rate. These particular notes are governed by a rather lengthy document called an indenture. Think of this as the rule book for the loan. It details everything from how interest is paid to what happens if Axos fails to make a payment. The company has entered into an agreement with US Bank Trust Company National Association to act as the trustee overseeing these rules and ensuring everything is followed correctly. This sets the stage for all the details of this massive borrowing operation. Now, this isn't directly about the notes, but it is important context. Axos Financial Incorporated's common stock is traded on the New York Stock Exchange under the ticker symbol AX. This means they are a public company whose financial health and actions are closely watched by investors. Issuing debt like these new notes can impact their stock price through various mechanisms, like changes in the company's debt-to-equity ratio and its overall financial leverage. And of course, no significant financial deal is complete without legal input. Thomson Coburn LLP has provided their legal opinion on these notes. This is a crucial step to ensure that all the legal aspects are buttoned up and that the issuance of these notes complies with all relevant regulations. It is part of the due diligence that makes sure investors can trust the paperwork behind the deal. Overall, this filing from Axos Financial Incorporated shows a company actively managing its capital structure by issuing long-term debt to fund its operations and growth. The move to secure $200 million through these notes indicates a strategic decision to raise capital and potentially invest in future opportunities or strengthen its balance sheet. The initial fixed rate of 7.00% is quite attractive for investors given current market trends. However, the subordinated nature of these notes and the subsequent floating rate period introduce elements of risk that will need to be closely monitored. Looking at Axos Financial Incorporated from a broader perspective, they are clearly making bold moves to finance their long-term plans. Issuing debt is a common strategy for growth, but the key is how effectively they deploy this capital. The company S direction seems to be one of expansion and solidifying its financial foundation. A notable risk here is the unknown trajectory of interest rates post-2030. If rates climb significantly, the cost of this debt could become a larger burden impacting profitability. Conversely, if rates remain stable or fall, the floating rate feature remains manageable. The company's strength lies in its ability to attract capital for its growth initiatives, but its weakness could be exposed if market conditions turn unfavorable, or if the deployment of these funds does not yield expected returns. The real test will be how Axos Financial Incorporated performs in the coming years, and whether this significant debt issuance translates into sustained value for its shareholders. Alright, that is our breakdown of Axos Financial Incorporated S latest filing. What is your take on these numbers and what they signal for the company S future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.